Welcome, it's denome. So if you're in the UK right now, take this video as a major warning of what's about to come. In this video, I'm going to explain exactly what the Bank of England just announced. They basically resume money printing, but they will also raise interest rates. So it's like a double combo to destroy the purchasing power and their economic activity in UK. So in this video, I'm going to explain exactly what's going on, what's the announcement, why was it done, and also what will happen afterwards. So anyway, here we are in the website of Bank of England website, and you can read this news release. I will link it in the description. But basically what happened is that there was a dysfunction in the market, and it was about to get worse. So the Bank of England had to do something to basically to avoid a Lehman Brothers situation. So a bank was about to go bust in England, so they had to do this emergency ruling. So in the last 9 months, UK was doing the quantitative tightening. So they were tightening the monetary policy to basically damp down the inflation. But this is a 180 to that policy that was before. So anyway, from now on, the Bank of England will carry out temporary purchases of long-dated UK government bonds starting from 28 September. So basically immediately they started purchasing these bonds again to restore orderly market conditions. The purchases will be carried out on whatever scale is necessary to affect this outcome. So I don't know much about writing an official announcement for the Bank of England, but to me this language is extremely desperate. I don't know how this sounds to you, but to me this is a very desperate. And again, they talk about the dysfunction in the market, and also another point here at the end is that they will not hesitate to change interest rates by as much as needed to return inflation to the 2% target sustainably in the medium term. So at the same time, they will continue money printing, but they will also keep raising interest rates. So I will talk about the outcomes and the effects and the unwanted consequences very soon. But let's just quickly take a look at the government bond rates in the UK right now. So right now the bond is about 4.15%, and as you can see from the summer of 2020, it has doubled and almost more than doubled already in the rate, and they will keep raising the interest rates higher than this, and this is an extremely fast rate that they are pushing these rates up to basically damp down the inflation that we've seen in the markets before. And at the same time, they will increase the monetary supply of the British pound. And just looking from 2020, this number was basically a little less than 25. Now it's 30. So that's a 15% increase, I think, in the total supply. I should calculate it, but I think it's about 15, just a head calculation. A 15% increase in the total supply of money, so they will keep printing more and more and more money while raising the interest rates. So and another crisis that's going on, by the way, is of course the electricity and the energy price, the crisis going on right now. So if you take a look at the energy prices in 2010, the energy prices were 12.7 pence per kilowatt hour, but now they are 32, so almost 3 times as much in the last 10 years, and they've almost doubled in the last few years as well. And if you take all these things together, what will happen? So okay, they will print more money, which will create more inflation. But at the same time, they will raise interest rates, which makes borrowing more expensive. So if you want to borrow money, that will be more expensive. So there will be less investment into the real economy, because why would you invest money if you can get a better rate just loaning your capital at a 4% or 5% or 6% to the government. So there will be less investment into the real economy because people would rather invest to the government, as well as just borrowing capital. If let's say you want to set up your own business, you have to pay more to the government, and also the mortgages will go up. Everything where you have to borrow money will go up. So that will create less economic activity in the UK. So now you have two situations basically hitting your purchasing power. At the same time, the inflation, the prices of everything in the market will be going up, but at the same time, borrowing will become more expensive. So you want to invest less and take less risk. So that's just, it's like a double whammy. And because we have this energy crisis going on at the moment, this is the worst time to actually try to tighten things up. So the only fix out of this situation that I can understand of is to actually to invest heavily into cheap energy, because this is basically the bottleneck, and to get people and companies to invest into future as well. But right now, this is just making companies and governments basically hunker down even more. So this is just this is just going to destroy the purchasing power all over UK, and this is horrible in my opinion. And if you're not prepared for this, what's about to come, you should prepare immediately or as soon as you can. This is not good for the purchasing power or for the real economic activity in the UK as well. So why did this happen? So here we have the news from skynews.com. Pension funds would have faced mass defaults today without Bank of England action. So this is the situation that the pension funds would have defaulted. So this would have been a Lehman Brothers moment, and all the markets would have just immediately crashed all over UK without this choice. So now the Bank of England is in a very hard situation. Do we take hyperinflation by printing more money, or do we just let the things collapse and then deal with the depression? Well, now they try to do basically a little bit of everything by raising the interest rates, by printing more money to save the pension funds. But this is just like another way of government malinvestment. So this money that is going into the market, it will go to all these financial instruments and financial institutions, banks and pension funds and so forth. So the money is not getting invested into the real economy that is creating the real economic activity. It's going to all these, how would I say, these bankrupt ready institutions that don't really produce anything in the market. So this is just like, if you take everything into consideration, this is one of the worst things that you can do to purchasing power in your country. Of course, it would be worse to deal with the depression. I don't know if it would be worse, but that's what the free market is basically demanding, is that there will be a depression. But because the governments don't want to do it, they rather do this, and this is like a silent way to basically raise your taxes. The taxes will not go up, but everything you have to buy will go up. So again, the government is becoming more and more heavy on your wallet to upkeep. So the governments are basically just too big for the economy at the moment, and they will just try to cling on to power. So what I'm expecting from going forward is actually more financial regulation and more even financial censoring. So like they said here in many situations in this post, that the goal is financial stability. So there's always things that you can explain in terms of financial stability. Like, for example, if you want to use Bitcoin in the open market, you cannot do that because it hinders the financial stability. So you will keep hearing this word here, and this will be used to basically keep control for as long as possible. So the British pound, if we take a look at the chart here, it actually went to against the United States dollar, it went to 1.04, which is, I don't know if this is the all-time low, because this chart right now is only going back to 72, but at least in the last 40 years, this is the lowest low the British pound has been in 40 years, or actually 50 years basically. It hasn't been this low, but the last low was in 40 years, and we actually broke that. So I'm expecting British pound to go even lower because of all these things, and because now there's just more money chasing less goods and services in the real economy, because there will be less services and less products in the market, but there will be more money floating around. So that will just also create even more inflation, because the prices will keep going up, because it will be more expensive to borrow money and to do anything. The energy is going up as well, and because there will be more money units in the market, that will also take down the value of money. So Britain is basically going into hyperinflation from what they just decided to do. So this is also where I see Europe is headed as well. So this is not looking good. So if you want to combat this, you can buy Bitcoin, you can buy silver and gold, or you can just buy commodities and food as a storage. Those are the safest options. But if those storages are full, then gold, silver, and of course Bitcoin is something that could help, especially if they start limiting how much you can buy in the real market, because if there's not enough, let's say, electricity during the winter, they might put restrictions on your bank accounts. So you may want to have some Bitcoin or some money outside the banking system, just so that you will not be censored from the rest of the world when these things come into place. And they will do it eventually, because they have to. They just don't have an escape. The government is just investing the money in the wrong place, from what I see. And this is also just how do I say a warning to all other people also who are not in the UK, to see how quickly things can go wrong and can go bad. And I'm expecting more civil unrest when these effects that I'm talking about in this video actually go into the actual market. So anyway, in the short term, this saved a Lehman Brothers moment, but in the long term, this will create more inflation, more price increases in the real world, and the real purchasing power will go down. The real economic activity will go down as well in UK, also in the rest of the world. And for USD, well, of course USD will go up, but yeah, United States is one of the lucky countries in the world, because they have the reserve currency status. So that makes USD value go up, because as interest rates go up, that means that all these companies and governments outside the United States, they have to have more dollars to pay back to United States. So that creates an artificial demand for USD, even though they don't really want it or need USD, but they have to have it because they have these outstanding loans nominated in the USD value. And that's basically the dollar milkshake theory, is that United States dollar will continue to go up in price because of these United States nominated debts outside the United States. And that bubble will burst also eventually when people and governments and companies start defaulting on their USD loans. And that's basically when I see Bitcoin coming in as well as a real like a very good bit, because that will be a different financial system, and you want to have money outside the current financial system when the shit really hits the fan. So these are just warning signs that we can see in the market right now. So prepare as much as you can, as well as you can. And in UK, I would even stock up if you can. I don't expect it to be anything too crazy, but it's better to be over prepared than to not have prepared enough. Because if you're not prepared enough, that's when you can lose everything. But if you are over prepared, that's fine. Okay, I was over prepared, but everything is fine. That's always better that way. Anyway, that's basically all I had for this video. Let me know in the comments, what do you think of the UK situation? What do you think of this announcement? What do you think of their plan? Will they actually be able to hit this 2% inflation number with this policy, or do you think they will also go into a hyperinflation like I'm expecting, or at least high inflation? Anyway, if you like this video, consider subscribing and liking it, and maybe joining in the Telegram group, which is, at least for now, free. So that's in the description as well. Anyway, cheers and see you in the next video.